Today's question: with a tech-heavy stock market, have we entered a new age of powerful growth stocks? My kids have selective hearing, and I think investors have selective memory. When things get really bad, we only seem to recall the bad and not what came after that. And when things go really well, we seem to get so caught up in the euphoria that we forget how that ended. What we're seeing in markets today is nothing new. We saw it in the late 90s, we saw it in the late 60s and early 70s, where top 10 stocks made up greater than 20% of the stock market, technology or otherwise. And what history shows us is that a number of these companies stay on top for years to come. And many of these companies eventually fall away. In fact, they all eventually fall away. Exxon is a case in point. What history also shows us is that the returns from these companies, once they hit top 10, far less exciting going forward than before they hit top 10. In fact, when you look back in history, on average, once these companies hit top 10, the return from these companies for the following 3 years is 1% greater than the broader stock market. For the 5 years and 10 years, they actually start to underperform the broader stock market. I think simply looking back in the rearview mirror will tell you that this is nothing new, what we're seeing in markets today. And I think you know how all of this ends, especially once you start ignoring fundamental company analysis.